Well, good morning, everyone. Welcome to our Wednesday morning trading room. One second here, we'll get the screen share happening. All right. Okay, so the market's just opening up, and it looks like it's a relatively quiet start to the day. Let's take a look here at the Eagle, kind of get an overview, if you will, of what's been going on. And it looks like the overnight fairly uncommitted. We got a little bit of a sideways trading range going on here right now. Let's see. Yeah, just kind of continuing what was going on through most of yesterday's session. Not quite as active, but we're here near the overnight highs to start the morning. And if in fact this is a trading range, we should anticipate that the market's going to trade a little bit lower and get back into that range from there. Oh, how's that? Is that a little better? Sorry, some audio problems. All right. Well, we'll just wait them out here for a little bit. It looks like pre-market, there were a couple of signals here on the Falcon, an early trend change signal. Quick little one. We're hovering, it looks like, as far as the support and resistance suite goes, we're kind of hovering right in the middle. So we're skewered by the median line, and we've got primary resistance and primary support bracketing what's going on here this morning. All right, a nice little hard edge bounce here now on the Raptor. I think that's going to coincide actually with the number one signal. We'll see if we get I suppose you could call this a second push opportunity, or you could just look to enter above the high. Like I said, if this trading range, the larger trading range we saw on the Eagle, is going to stick, then we should see the market head lower. And this is actually going to be a counter trend signal, a number two signal. And you could try to short that. I don't really want to go in with two contracts here. Maybe what I'll do is I'll just hit the sell market if it trades below the hash mark. All right, so there we go. And all I'm doing here is I'm looking to see whether the market is going to remain in that sideways trading range. Now, whenever you do a counter trend type trade, you're always placing yourself at greater risk, probability wise, not necessarily dollar wise. Right, we'll get a stop loss order working now. Okay, stop loss order. Come on. Why is my stop loss order not engaging? Oh well, I'll just have to do it manually. Yes, Dan's mentioning there you don't have a stop. That's not intentional, Dan. For some reason, my trade manager is not giving me a stop. So when that kind of thing happens, you have to set yourself a mental stop. So let's say my stop is going to be right here. Huh. Okay. What I'll do is after this trade closes out, I'll show you how to reboot your trade manager. Yeah, thanks, Scott. Scott says if you want to upgrade your trade manager, I can put you in touch with a guy. I know a guy. All right, you can see we're just very, very sideways here at the moment. We had a little bit of a run up earlier. Several hard edge bounces. I think the greatest disadvantage of attempting a counter trend trade is that it blocks you from doing with trend trades. So it looks like they're going to try to tag me out here in a minute. All right, so we'll get rid of that. All right, so your trade manager is not behaving the way it's supposed to. What you need to do is you want to make sure you're not in a trade. Then right click on your chart and go down here to reload NinjaScript, or you can just hit your F5 button. You're going to get this warning because Trade Manager is a strategy, and you'll want to click yes. And essentially what that does is it restarts your Trade Manager. So now I should have my stops working properly again. Disappointing little move. Market not really wanting to go higher or lower at this point. I'm not convinced. I was on the wrong side of the trade, you know. Here we come back with yet another selling attempt. What I might consider doing here is an OCO order. We've got ourselves a sideways looking market. I know here's the bottom end. We'll see if there's a little bit of a push up here. This isn't really, doesn't qualify as any of our high probability signals. All I've done here is identify where the market is stuck. It's not wanting to go higher. It's not wanting to go lower. All right. So which way do you want to go? Remember, when you use your OCO orders, these orders are live when you put them on your chart. It's not usually a good idea to crowd them too much, so I'll tend to give them a few extra ticks. And there you can hear the construction traffic in the background. This is our last day here at our house sitting for our friends. They're coming home this evening. Yay! It'll be nice to be home again. Chihuahua-less. Yeah, Scott. I like it. Scott says short sheet their beds. That's not a bad idea. After we were here for a few days, my wife said, I was wondering why she kept asking me, are you sure you want to do this for us? There we go. Okay, so the trade manager has reset itself. It seems to be functioning correctly now. I think what happened before is, you know how sometimes you get faster than the computer, and just out of habit you start pushing buttons, and sometimes the programming doesn't quite keep up. I didn't intend to actually bring my stops in tighter. I meant to leave them a little bit looser there. So a very, very weak breakout below the bottom end of the channel, comparable to the weak breakout at the top end of the channel. We'll see if this one goes anywhere. Oh, it's quarter to the hour, my least favorite time of the day to trade. There may well be another retest of this high, which is why I'm trying not to be too anxious with my stop loss order. I moved back down here toward the recent lows, somewhere around maybe 68, 84, 85 would be a very nice move. 68.90 was a big number for us yesterday, and it looks like we haven't really moved too far off that mark yet. Okay, here we go. The sellers have got to start stepping up here. While that's perking away, just out of curiosity, I didn't have a chance to reference a longer term chart this morning. Okay, so here now a daily chart, and it looks like we had a fairly decent reversal yesterday. And the market doing its best to recover from there. So it looks like if we trade back above 7,000, we can call this market bullish. If we trade below the low yesterday, around that 68, what is that, maybe 30, then we can call the market bearish. Yeah, Andrew, I get your point. Andrew says that's why I can't trade the NQ. 1 minute you're in the money and seconds later it's all gone. I favor crude oil and gold now. I think it's to your advantage to settle on a market, regardless of what the market is, whether it's the NASDAQ or the E-mini or gold or crude, and get to learn the market personality. The NASDAQ, well, any market really, when it's trending well, you'll have loads of opportunities. When it's sideways like this, it's kind of like sticking your nostrils together with crazy glue. It's just flat out annoying. All right, well, I tried 2 times to short it. Doesn't look like it's all that keen on heading lower because it keeps reversing. It looks like the stops have to be pretty big, though, if we're going to try a trade here. For the most part, though, the market is still sideways. And in a sideways market, the best thing to do is to let the market get out of that sideways range and then show you that it's prepared to stay out. Yeah. Andrew says, I don't think the NASDAQ has a personality. If it does, it's called schizophrenia. Yeah, the NASDAQ can be very bipolar. I don't deny that. All right, so there's the bullish break. Looks like this probably printed as a number 1 signal on your Raptor. David asks, how about trying to play the range? Absolutely, David. I did try that. The range type scenario here on the short side, I bracketed the market Didn't work out quite so well for me. Those little bracket trades, if the market gives you a decent breakout, they can be good opportunities. And you know what? In hindsight, given how stagnant the market is, maybe I should have been a little bit more aggressive with my stop loss orders. I'll be back in my office tomorrow, so I'll be able to trade normally, if you will. Just so everybody knows the schedule, I need to close the room at the bottom of the hour today, as well as Thursday and Friday. And Monday I am out of town, so there is no trading room on Monday, but I will remind you of that as the week goes on. All right, I'm hoping to see something resembling a hard edge bounce here. Now that we've, oops, sorry. Doggone it. Where'd my screen go? Oh, it's going to be like that, is it? There's the eagle. No, doggone it. I think I deleted it. Good old touchscreen computers. I'll rebuild the Raptor chart. Raptor, there you are. Oops. Yes. Yeah, sorry guys. Everybody's telling me, yeah, that's natural gas, Eric. Okay, I got it. It's early. Let's try this again. Natural gas actually not a bad market for day trading either. All right, let's get rid of those things. And put the trade manager back on. All right. Let's try this again. And why do I only have one cloud? Ay. You want to make sure that your clouds are different colors. Any color will do. Oh, let's do here, cadet blue. Sorry about this. guess I better make a point of updating my laptop a little bit more often. There we go. I blame Windows 10. It's a very annoying piece of software to use. So I tend to use my laptop only when I have to. All right. So the market now, what I was trying to show you in a little bit of a breakout mode. So we've made the breakout. We're going to come back. We're going to retrace. Yeah, Mark says, I blame Windows 10 daily. Yes, I won't get into my Windows 10 rant today, but they really should have stopped after Windows 7. All right, come on, just a little bit lower. Give me that hard edge bounce. And that's what I would be looking for now. Now that we've broken outside of this sideways trading range, or what appeared to be a sideways trading range, we should expect the market to come back, retest, and then try to continue higher. If in fact the buyers are going to remain in control of the market. This is what we refer to as a discretionary signal. So we do have a buy signal. If you wanted, you could just look to throw in a just in case order. Ooh, I'm in manual mode. Let's try that again. You could throw in a just in case order, even though it doesn't qualify as one of our high probability signals. The lack of follow through here this morning is quite impressive. It'll probably stay this way, I'm guessing, for the remainder of the week, where we're just going to see a lot of this sideways, back and forth, minor swings. I'm not sure we're going to see a really good trending day. According to the daily chart, though, that we were looking at, if this market's going to recover, it has a long ways to go. It could trade back up. See, it has to trade all the way up here near 7,000 if the buyers are going to recover this. So there's potential. There's potential for a very big move here, providing the buyers, well, can muster the rally. I'm not so sure they can myself. This is the kind of day where I normally spend a lot of time just watching the chart, not really trying anything. Honestly, I probably would have tried the bracket trade, the one I tried earlier on, because that did look promising. Of course, I recognized too late that it developed at quarter to the hour. What's the deal with the quarter to the hour trade, you say? Well, it seems like about 15, 20 minutes into the session, a lot of times the market kind of throws you a signal and then doesn't want to follow through on it. Other times it can be a decent move, but a lot of times, especially when the market seems to be lacking direction, you kind of get those false moves. And here we go again. That slow sideways drift. Looks like they're going to come back here and give me that hard edge bounce after all. We do have a number 2 signal. That's the counter trend signal if you were inclined to try to trade it back to the hard edge. So things getting a lot more shallow now as far as the bullish trend is concerned. It's a very big sideways, hopefully bull flag. Okay, we're into the first hard edge of the trading band. This will be a good test. There's probably going to be a little bit of a swing through here still, perhaps another retest of the trading band. But if the buyers are going to rally the market, they're going to do it from around the hard edge. Likewise, If this rallies up and fails, then there's a pretty good indication that the sellers are going to try to knock the market back down. It's kind of like trading in slow motion. The markets do get quiet, but they don't tend to be quite this quiet. Certainly not in May. August? Yeah. Yeah. Like Mark says, trading in jello. That's almost what it's like. All right, a little bearish follow through now on that number 2 signal, or the series of number 2 signals that printed. Again, the target is the hard edge. We've had a bit of a heat wave here in the Pacific Northwest. Well, the heat wave for this part of the world. And the weather, it always seems to change so suddenly. It'll be cool and wet one day, and the next day, you know, temperatures are mid 80s. And you feel like you're a mile from the sun. But because we're so close to the ocean, well, we're on the ocean, not a lot of people have air conditioning here because there's normally a cool breeze coming off of the water, except those times when the temperature makes those violent swings. So as a result, it makes it a little bit difficult to get to sleep at night because you're lying in bed sweating. All right, so it looks like that may have been the retest of this breakout that we saw back here. They may get a little bit lower still. They may actually get to the hard edge. And you can see how the hard edge is pretty much going to coincide with that breakout level. All right, here we are. Let's see if the buyers show up. So if we get a buy signal from here, that will be a number 3 signal. That will be a hard edge bounce. And it's actually not a bad opportunity because by all rights, the market should try to retest the highs. And what that means is that there's enough in there, if providing the signal prints relatively early, there's enough in there that you should be able to at least get to your high probability profit objective before the market starts to feel some pressure from the highs. All right, a little bit of a pushback from the buyers. Now the sellers are going to show up here somewhere, maybe around 69.18, try to knock the market down one more time, and then we'll have a pretty good idea who's going to control the market. All right, there's a little bit of selling. Oops. All right, that is our bullish trend line that hopefully the buyers will respect. If not, it looks like the sellers are going to knock the market down. So I can bring my stops in a little bit. If you wanted to do an OCO trade, there's a good level to buy above, say around 69.19. This is probably going to be a pretty good level to short. All right, well, that's promising. And this, by the way, the number 3 signal, or it may have printed as a number 1 signal on your Raptor because the clouds were out of sync and they're back into sync. Regardless, this is a signal that you should have anticipated after the market encountered the hard edge. Oh, come on. Stalling at the high. But of course, that's where the sellers showed up. This is a pretty important run here for the buyers. If they can't get it above this 69.25 area, then we're probably going to continue in this sideways drift. All right, here we go. They tagged 69.24 3/4. No, no love right now. Okay, come on, buyers. A little bit of a pushback off of the high and should see some buying here around 69.20-ish. Okay, last chance. I don't want to be too quick with my stops, but I'm really thinking about jamming my stops under here, under 69.20. And either making the market stop me out or break the highs. I suppose what I could do is I could go somewhere here, kind of halfways. My concern is that there could be just a slight little hesitation. There hasn't been a whole lot of follow through this morning. You see here to the downside, we had a little hesitation and then another little hesitation. To the upside, we may get the same thing. And I don't want it to break 69.20 by a tick or two and then reverse and head higher. As it is, like I say, my stop's a little bit tight where they are. The ideal stop still back here. Actually, you know what? We're not going to, I was going to say, we're not going to get another trade going here this morning. I could bring my stop back here. But they tagged me out. That is what I would refer to actually as a good loss. Sure, the trade didn't work out, but I did everything correctly. You know, I managed the trade well. I did everything I could to make sure that that trade would work out. But it just didn't want to. Andrew says the E-mini is trying to drop. So if it were my trade, I would have killed it too. Too big a stop for me, says Andrew. Yeah, stop placement is a kind of an art. You know, you don't want your stops so tight that you get stopped out prematurely. Likewise, you don't want them so big that they cost you too much, but that's why we use the risk component of the trade manager. It always caps our risk at only 2%. And of course, you can dial it down if you only want to risk 1% or 0.5%. It depends on your account. And here they go again. So we got ourselves another very sideways type market. You could do another OCO type thing if you chose. Honestly, I would probably avoid it. Now that I've said that, watch this give us a huge breakout. The thing with stop losses is you have to remember it's not a loss if it doesn't get hit. And it's a balancing act, like I say. If your stop is too tight, okay, it's less, but you're more likely to get hit. If your stop is further away, okay, it's a greater stop, dollar-wise, but it's less likely to get hit. I know that was a hard lesson for me to learn. A broker friend of mine always used to say, Eric, why are you placing your stops so tight? Give the trade a chance. Andrew's asking, are you going to trade crude oil inventory? No, Andrew, I can't. I'm sorry, today, tomorrow, and Friday, I need to cut the session short. I'm going to have to button things up here in about 5 or 6 minutes. I have appointments the remainder of the week, and I'm afraid I need to cut the trading room a little bit short. Crude inventory is a great one to use a bracket trade on as well. What I was going to share with you though before I left is, and a lot of you will have heard this story already, but my trading friend Tom Loge, he used to run insanely tight stops. Well, he still does, but he would run a stop like a $25 or $30 stop. That's it. Well, even in a market like the NASDAQ, that's only 5 ticks. And Tom was trading the bonds. So I guess he would be running $30 stops, not $25 stops. But that's only a tick or two in the bond market. So he would routinely get stopped out 5 or 6 times a day or more. And a lot of times he would take, you know, 2 or 3 or even $400 in losses before he finally hit a winner. Now, of course, his winner would offset his losses. At the end of the day, he would be making money. But I said to him, Tom, why don't you just run one trade and place a $300 stop? If nothing else, you'll be saving a fortune on commissions and fees. But that didn't make sense to him, right? He could not tolerate a $300 stop. That's the thing about trading. It's a very, very personal business. You know, you got to find what works for you. I can show you things here, things that suit my trading personality, but don't think for a moment that that is necessarily the best way, and certainly it's not the only way to trade. Well, yes and no. Andrew makes a comment. Bond traders use order flow, though, not charts, as they are only a derivative of price action. Tom knew his way around the bond market pretty good. He used to trade a $30 million bond fund, and he would follow charts as well. All right, gang, looks like we're just seeing more and more sideways trading here. You know, it's tough to get a direction today. Just going back here to the daily chart for a moment. Like I said, until the market gets below yesterday's low or above yesterday's high, we can probably expect things to remain a little bit stagnant. Even though yesterday had a very bearish day overall, the week leading up to it looks like it was pretty bullish. So if you're in doubt, you probably do better on the buy side today. Unless, of course, we get below the low, then look out below. Then the sellers have steamrollered over the buyers. All right, everyone, my apologies. I do need to shut down the trading room early today. I will see you again tomorrow. Hopefully things will loosen up a little bit for us. I will talk to you then. Bye for now.